Okay, so I wanted to talk to you a little bit today about more affordable programs such as Plaza's FHA Zero Down 100% Combo Program.
And this is not a flyer?
This is the flyer.
So you have a flyer.
I have a flyer for this program,
Yeah.
but there's another program. I
Okay,
wanna
okay.
talk
So
about
let's
that I
let's
don't-
then start with that. Yeah.
Okay, so the FHA 100 is just that. It's a 100% program. It's a first second combo. We have as normal a 96.5 first with a 3.5 down payment assistance second that Plaza provides. The product is only for purchases. And it does have to be a primary residence, naturally, since it's an FHA program. The program will only do conforming loan amounts. It does not do high balance, but it does do.
So it's 806 on the areas with
806, yeah. But it does allow for 1 and 2 units, so you can start producing some rental income from the second unit.
But then the second unit again limited to whatever conforming to
Loan
first second.
limit is, yes. Mm-hmm.
Which might be still okay in certain areas.
Yes.
Like in Portland.
It works, yeah, in Portland it'll work out really well.
Yeah, I didn't see many 2-unit buildings there, but yeah.
So it's a 30-year fix, but we did just recently change and allow 25-year amortization, so anything between 25 and 30-year amortization, which often helps qualify. A lot of times you'll run AUS and it doesn't approve. Try lowering the term. It may increase the payment a little bit, but oftentimes it'll make the difference between getting a refer or ineligible to an eligible.
It doesn't make sense.
That doesn't make sense.
But it's the truth. I think it's just the fact that it's a lower term if the borrower still qualifies. So that's
But what the ratios then?
the ratios we follow AUS.
So what will be the max?
FHA does not.
Whatever
technically
FHA
does
will
not
approve.
have
No, but really.
I've seen as high as 56.
56, yeah.
That doesn't mean that they won't go higher. I haven't seen higher than 56, but I have seen up to 56 DTI get approved.
Yeah.
And that's pretty aggressive for 100% financing.
It is.
Yes. Also, the second qualifies at 2% over the rate on the first. So if you get a 6.5 rate, you're gonna have on the first. You're gonna have an 8.5 rate on the second. And that, like, if you do a change of circumstance, the second is gonna change alongside the first.
And when you say 6.5, which is higher than what I have seen for FHA loans.
Yes, the rates are higher.
That's the point. So basically, if somebody will scrap 3.5% and borrow again, because you can 100% give, and then you will get better rate if you rely on lender to provide you missing 3.5%.
Yes, there's quite a few people out there that just don't have the money saved, or they still want to have a little cushion for buying.
No, of course,
stuff,
because
that
it's
sort of
how
thing,
much
and-
cash is available. Yes.
Yeah.
So in those cases, you need to have higher income to qualify, and there is no income restrictions to those programs, right? Not like CalChaf or whatever.
No, so that's the beauty of it. This product is designed for ease, and it's a quick, easy close. So there's no first-time home buyer requirements. There's no income restrictions. Again, we follow AUS for the DTI. So a lot of products out there have more restrictive guidelines for their 100% financing. They have those income restrictions.
Yeah,
they have
LICT is a
Yeah.
one.
Yeah.
What you're referring?
Low income census tract. That's the way that you can get someone who has over the income threshold if they're buying in a low income census tract. And a low income census tract is any HUD census tract where the average household income for that little area is lower than the average for the large.
Yes,
Okay.
typically it's like 80% of the area median income.
In this neighborhood, let's say.
Yeah.
Let's
Like
go.
for,
Right,
for
and
home
the
ready, home
particular
possible, it's 80% of the
So-
area
So
median.
let's just say you pick, I don't know, some county in Central California. And you've got in that county, you've got an average household income of maybe $110,000.
Mhm.
Let's just say that. Any HUD census tract where the average household income is 80% or less of that 110,
So 88,000, let's say.
it's 88 in this example. Someone who makes $500,000 a year can go in and take advantage of that,
Mhm.
what amounts to
Yeah, I understand.
the
Okay, so
Community Reinvestment
Yeah.
Act.
so they don't even they don't look in the amount of money you make, but or
They're looking at the area more than the money.
One way to qualify is by income. Another is by area, where
Yeah.
the property is
yeah,
located.
yeah, yeah. Interesting.
So for this product, it's
You don't have-
neither.
you don't have
You don't
those.
have those restrictions.
Yeah.
So that's one of the beautiful parts of the product.